Hello everyone and welcome to the Forex Weekly. Hello everyone and welcome to the Forex Weekly webinar. My name is Mark Armstrong. I'm a financial advisor and personal broker here in Forex. Today we are going to talk about trend trading and how we can make money when the markets are trending. As we know, there's different situations that we can see in the markets. There's different types of things that happen, different patterns that happen at different times. So the first thing that we need to do, identify when we're trading, is which direction is the market moving? Is it moving up? Is it moving down? Or is it moving sideways? For the past few months, the markets were kind of locked in a sideways motion. And they were basically trading sideways. So the trend was flat, and that was a perfect time for range trading, which we discussed at that time. And since those ranges were broken, since the markets started moving, we've been seeing some very nice trends. We've been seeing the markets trending and some very clear directions to take advantage of. There's an old trader sentence that says the trend is your friend. So we always want to be in the direction of a trend. A trend is defined, as the way the market's moving, the direction that the market's moving over time. And let's take a look at the euro dollar over here, and we can see this was all range trading, where the markets were moving flat, not going any specific direction. But rather just kind of going up and down. And when there's range trading, it's a very great opportunity, because we can just basically buy at a low price and then sell off at a higher price. Or if the price is really high, like over here, then we could just sell it, enter a sell position and then close that position out at a lower price. And that's range trading. But since this range was broken, and we can see that it's been moving a very singular direction. It's been taking a trend. So let's zoom in a little bit over here so we can see what's going on. Okay, and this is a 1 hour chart, and we can see very clear direction. And generally, we want to put a support and resistance line, which we should all know how to do by now. We basically drag the line across chart and then try to touch as many tops as we can along the chart. Okay, and we can see that we touched 3 points here. 1, 2, 3. The line was not broken, so this is a good resistance point, or point of resistance. And then a support is basically the same thing. A support and a resistance are the same thing. The resistance is on the top and the support is on the bottom. And we can see that the trend was so strong that it broke this support line here. Okay, and as soon as it broke through that support line, that was an even greater fall. It continued on this trend, and now what we're seeing is called consolidation. Now, for short-term traders, really short-term traders, scalpers, people who like to take trades for 5 minutes or 10 minutes at a time, we can see this over here really as kind of a range. This part over here, let's make that yellow. Okay, and that's more like a range. And what we'll try to do is that once it's up near this line, or even once it gets to this line would be even ideal, is to enter in the direction of the market, and then to take advantage of this trend. Because when a trend starts happening, it is likely to happen for quite a while. Now, obviously, nobody can predict when it's going to end, but what we'll do, we'll just take advantage of it along the way. And let's say we're trading here on the euro dollar, so we'll put that down, and we'll enter a position here. Okay, small position of 10,000, and we're selling euros. We'll just click OK to open up that. And one of the great advantages of trend trading when the conditions are so nice like this is basically that we have a very defined place to put our stop loss. In case the trend reverses, then we can, basically just jump on it and just, if it reverses and goes against us, because it could continue on for a day, it could continue on for a week, it could continue on for the next year. We don't really know that at this point, but what we do know is that we have a nice trend to trade on, and always the trend is your friend. So keep on top of it and keep in the direction of the market. I don't want to see people starting to predict where the market's going to turn around at this point, or say, okay, something is very low, so let's buy it. Rather, just go in the direction of the trend and continue with it. So again, like we said, the stop loss. So we can either set it right above the previous high, or even up here would be safer because we can see this level. Let's say 2880, just to be round. 2880 is above this previous high, and it's above our resistance line. So that's just a nice place to put a stop loss, and we can continue that. If it comes up a little bit more, we can enter another small position. If it comes up a little bit more than that, we can enter another small position and just scale into this one. Or if it comes down against us, we can open up another position, but always with the trend. All right, so we could say 2880 is our stop loss. Let's put that down. Okay, and to enter the stop loss, we see right now the SL rate on this position is blank, so we'll just double click that. It'll open up the position details, and we enter it as a rate. We say 1.2880, and then if we're wrong, if the trade goes against us and the trend turns around right now, then fine, we'll lose $150. However, and we have an account equity here of $6,000, so it's not that big of a deal. If the trend goes with us, though, we can see the potential, or we can try and guess maybe where the market's going to turn. Obviously, nobody can predict the future. And if we look at the daily chart, that'll normally give us a bigger insight as to how far this is going to continue on. And we can see that there's another support line coming up over here at 2626, which is about just this December of last year, December of 2011, about 5-6 months ago. It was at 2650. However, if we zoom out even further, something I was noticing the other day, we've got a nice spot over here where we can see here's another support line over here. So this is not the lowest it's been in the last 2 years. It's not even the lowest it's been in the last 5 years. Also, specifically about the euro dollar, many analysts have been most analysts, I would say, are very skeptical about the future of the euro and retaining these levels. So a lot of people are predicting that it could eventually reach 1-to-1, meaning that 1 euro equals $1, or on the chart we would see it as 1.0000. So there's just a lot of potential here, especially on the long term. But in the short term, this is again the focus of today's webinar. We'll just look at the short-term charts. Let's say the 30-minute charts, or the 1-hour charts. We see the trend, and we just get on top of that. Another thing we can see a very strong trend. Well, all the markets, as we know, the markets are all correlated. They're all related. So when there was range trading, it was range trading across the entire market. Nothing was moving. Now, because people are very skeptical about the future, they're skeptical about what's happening in Europe. Greece right now is in a very bad situation. They've just had their elections last week, and their government has been fractured. meaning that the way that their parliament system is set up, nobody can actually hold a majority right now, so nobody can really be the prime minister of Greece because they can't gather all of the different parliament members together. So what they're going to do is they're going to basically appoint somebody from outside of the government to be the prime minister. So I'm not sure exactly how that's going to work. Many analysts are very skeptical about that. Again, first thing we do when we're looking at the chart, we draw ourselves a resistance line, a support line. No, they don't have to be exact. It's more just to get a picture of what's going on, or to get an idea, rather than to be perfect. Because in any case, every investor is going to draw their lines a bit differently. But what I want when we look at this chart, what I want us to see is the downward trend. And the way we can see that, it starts off here up on the left-hand side and then ends up here down on the right-hand side at the bottom. So it means that it started out this chart at 1640. Now it's around 1540. So that's $100. That's a $100 movement. And can you imagine, just you have one, a 10-ounce position and a gain of $100. That's $1,000 profit right there, and that doesn't take a large capital to enter a 10-ounce position. All right, so we can see it here. Ideally, we want to be selling on any type of resistance, so we'll wait for some sort of a pullback. We'll wait for the market to, just like it did about an hour ago. So this really would have been a perfect entry point right over here. And we can see. That would have been a really nice place to get in. But again, we can get in pretty much anywhere. It's not an exact science. There's no picture perfect way to trade. Just as long as we're following the trend, just as long as we're constantly closing our positions in profit, and the losing positions will get out with relatively little loss. Or for somebody with a very large account balance, they can say, okay, I'm not going to take any losses. I'll just wait for the trade to go back in my favor. Especially on gold, I still think there's a very large upside for gold. I mean, it was at $1,900 an ounce just a year ago, so that's it's a very large upside. But who knows? It could come down a little bit further even before it turns around. So there's no real way, again, of telling where it's going to turn around. Let's look at a daily chart to get a better idea. And we can see that we have some sort of a support here. Actually, a very nice support. Over here, we can see that it bounced off this level twice. We can also see that this was the level that when it broke away very strong, and from there went almost straight to 1900. That was the markets just going, yeah, and I remember analysts saying it's going to go to $2,500 an ounce. And it may get there eventually, and it even I think very likely, especially with all the money printing that's going on, is definitely a good factor for gold. However, at this point, most traders are so squeezed for capital. Most investors, most even institutional investors, and we saw that J.P. Morgan, one of the biggest firms in the United States for trading, has just announced a loss of $2 billion. We're at a point in history right now, being 2012, we're seeing a lot of money changing hands. Rich people are becoming poor. Poor people are becoming rich. The way of the world generally is that the rich get richer and the poor get poorer. However, with Forex trading, I firmly believe that this is one of the ways that that we can see. I mean, that we can see those reversals happening much faster. Why? Because anybody is able to take advantage of what's happening right now, of the price movements that are happening right now, but not just to take advantage of them, but to take advantage of them 200 times. Meaning that in the Forex account, you've got 200 times leverage. So a small investor who wants to start out with $2,000 or even $500, let's say you want to start out with $500, used to be that wouldn't, a broker would laugh at you. You want to open an account with $500? What, are you kidding me? But these days we can actually take that and we can leverage it, meaning that with $500 we can't even buy 1 ounce. We can buy a third of an ounce at $1,500. But with 200 times leverage, we can buy several ounces. We could buy 10 ounces, 20 ounces, even 30 ounces. And even just a $10 movement is a significant amount on our profit and loss. We got to be on top of it, though, especially for a larger balance. Again, you don't need to, as long as you're trading with the proper leverage, no big deal. But for a small balance, we can really see, some excellent trends here, some excellent returns. Surprisingly, not very many of my traders. I've been talking about this since the markets have been ranging, that they're going to break out and they're going to start a trend. So I want to see more of my clients taking advantage of this, because this is one of those things that you want to. This is why we're in the market. This is the exciting part of the market. All right, for those of you who are new, first of all, welcome, and you should have a box there for asking questions. Sorry about the sound. I know that it might be very clear. I know that we've been having issues in the web. Maybe it's the provider or maybe it's connection. I'm not really sure. We are looking into it. But this session is being recorded, so I'll be able to send you a recording afterwards. Can you hear me now? Okay. Can anybody tell me if you can hear me well enough to go on? Just go ahead and type it in there. Say hello. Say hello, anybody? Can you hear me now? Hello? Hello, can you hear me? Is there anybody listening? Is anybody out there? Still cannot hear anything. All right. Okay. Well, in any case, I'm going to be sending this recording, so that should help most of you. Let me type on the chat here. Questions. I need questions. Questions are essential for the learning process. I get a lot of people who want to trade and who want to learn how to trade, and then you don't hear from them in a while. So definitely, one of the things is to ask questions, is to learn. So I don't expect anybody to just start opening up a trading account, put in $100 and make $1 million. It is a process. So, part of that process is asking questions and gaining knowledge, studying and learning what everybody without exception gets exactly what they want from the market. So, first of all, know what you want from the market, know what your goals are from the market. It's something that's very important, and don't be shy. Definitely don't be shy. If you want to know something, the only way to know is to ask. I don't know everything. So if you ask a good question, I'll probably have to go and find the answer for you, which is something that I really enjoy. It's like, wow, what an excellent question. I'm going to go find the answer for you. Okay, let's take a look at some other things that everything. The markets are all moving together, as we know. So let's take a look at some other opportunities here. Some of the biggest ones that I've noticed are the Australian and New Zealand dollars. Also a very strong correlation between the Australian dollar and the New Zealand dollar. Probably if we look at the Aussie NZD, we'll probably be seeing something that's more or less flat. Yeah, a slight range here between, always 1.2. This is a daily chart. But today the Aussie gained on the New Zealand dollar. But I don't like to trade these crosses. This is a cross when we trade anything against another uncommon currency. So we're looking. I like to trade on the majors, which is anything against the U.S. dollar. So the Australian dollar, Canadian against the U.S. dollar, New Zealand against the U.S. dollar, US dollar, of course, the U.S. dollars, Swiss franc. Those are the major currencies. Those are what I like to trade on, especially have a nice diverse portfolio in there. All right, again, we can see here's where the markets were ranging, and then we've broken out of that range, and we see now this very strong trend. This is just delightful to see these type of trends happening in the market. Because everybody, even a small investor can make a lot of money from in trend trading, because because the way we make the money is the difference between the price that we opened the position until the price that we close the position. So when they're moving like this, we can actually, from one position, we can make a buttload of cash. So again, we'll draw a resistance line here. Kaboom. And we'll draw a support line here. We got ourselves a tunnel. Again, you see how the support and resistance are drawn. It's just as easy as drawing a straight line. We try to touch as many points on the resistance. We try to touch as many high points as we can without breaking through. And on the support line, we touch as many low points as we can here and here without breaking through. And then, to join the trend, we just go ahead and open up a sell position somewhere near the resistance. Right now I don't have very much patience, and we don't have forever, so I'll go ahead and open the trade already. The Aussie dollar. And I want to sell it in a small amount. Click OK. Great. Generally, I would want to put a stop loss in here just in case the entire market reverses. I think you get the point. Okay. So that's the Australian dollar. The New Zealand dollar has been making even larger movements. NZD, USD. The Australian, like we said, the Australian dollar, the New Zealand dollar. Right now they're moving with the euro, because what's happening right now is, once again, the markets are very uncertain about the future of the economy, where the economy is headed, and people are overall, fearing a global meltdown right now. It's something that's very serious in the marketplace. So, it's something that's causing concern, and when there's concern in the market like that, people just want to put their money somewhere that's safe. And right now, the only real place that people can think of that's a safe place to put their money is in the U.S. dollar. And even the Swiss franc is not even safe anymore, because it's tied to the euro. Gold is not really safe anymore, because it's been so overbought in the last 2 years, because everybody's been concerned about the situation. So the only real safe place right now that people are seeing is the U.S. dollar. So basically, we can see that it's been gaining against just about everything. And maybe here is not the best place to enter. Again, we want to just put ourselves a resistance line here, and then we would want to sell once it's more closer to that line, so maybe 77.40, around about that area. And again, you leave a little bit of room, margin for error, because every investor draws their lines a little bit differently. Another thing that I wanted to speak about today is the Canadian dollar. The Canadian dollar's been ranging for a while. Let's open up the chart here. USD CAD. This is one of the major pairs. Okay, I want to look at the daily chart. Always when you're looking at something new or a new instrument, it's good to zoom out first and see what's going on overall. And we can see that there was a nice range. Here is where the markets were ranging, and specifically on the dollar Canadian. The US dollar and the Canadian dollar are very correlated as well. They're some of the more correlated currencies. So there was a big range. And actually we had a little bit of a fake out here, because we can see that the market did break that support. Okay, but because the US dollar has been getting so strong, that's basically the trend that eventually took over, and we can see it went right through there. And again, it's broken the range now. I think that it could continue on upward a little bit. Again, this is a comfortable price. 1-to-1 is a very comfortable price. And if we look at it historically, we know that the US dollar, Canadian dollar, generally 9 times out of generally it tends to come back to this level. It tends to always come back to this 1-to-1 level, no matter how far it gets away. So that's an excellent place, I think, still to put your targets for. I think maybe it can come up a little bit further here, especially now. We can see that this resistance was broken. Whoop, that's the wrong one. The daily chart. And look at that trend. It's just beautiful. Okay. And we'll put a line over here. Whoops, that's the wrong kind of line. On this computer that I'm on right now, it's a bit slow. Just an excellent view of the ocean from here. Wish I could show you guys that. Here we go. We'll just draw that line there, and we can see that that resistance is really no longer a factor, but we might get a little bit of resistance around this level. So I think that we have basically 2 general ranges here, general comfortable price ranges here for the Canadian dollar that we can see. Okay, so this is what the markets generally do. So they make a range, right, and they'll bounce back and forth between the range, and then once that range is broken, they'll generally continue on towards the next end of the range, and then range a little bit again. So this, now that it's broken, I think the Canadian dollar was the latest, to break its range. It was it's a little bit sleeping there. Let's see I like the 4-hour chart, especially on the Canadian dollar. I saw one client do very well with $500, turned it into $10,000 playing these 4-hour ranges on the Canadian dollar. See, this is the 4-hour chart. We can just see back and forth all the time, just back and forth and back and forth. Now that it's broken, I could continue up for a little while, but I think the eventually, again, the 1-to-1 seems to be the magnet on the US dollar, Canadian dollar. Oh, I wish I had some more questions here that weren't technical. I'm not a technical guy. I like the markets. Okay. All right. For always, you can ask questions. If you're watching the recording today, you can send me an email. My email is mark.armstrong@bforex.com. Or you can meet me on Facebook. A lot of my clients, and more of my my favorite clients are always posting on my wall, questions about the markets or articles or things that may be interesting to other traders. You can always visit my timeline on Facebook, and you can join the discussions there. If you find a comment from somebody particularly interesting or helpful, click the like button. It's always appreciated. Or just join the discussion. That's the main thing, and then we all help each other, all trade together. But that's pretty much it. I mean, it's pretty straightforward what we're seeing right now. These real strong trends. I mean, the market could turn around in the next hour, which would be a real shame. But they've been trending for a few days now. It could turn around, but these type of trends, they tend to last a while. So they tend to go on. Crude oil also. Crude oil is one of the major trending instruments. Always crude oil, when it gets locked into a trend, it just doesn't stop. It just generally continues on, and people get surprised, and people get dumbfounded by crude oil over and over again. Think about it. Crude oil, it costs a company about $15 to produce a barrel of crude oil. Okay, but the price movements that we've seen from crude oil are just incredible, and I'm talking about just in the last 3 years. We've seen it as low as $30, up to $150, back down to $30, and then up to $100. These are incredible price movements, and always it goes along with a trend. So when there's a trend, it's the perfect time to get in. It's the perfect time to capitalize on it. When it's ranging, we can buy low, sell high. A lot of my clients, I saw a very, very big progress from many of you on the range trading, where we buy at a low price, sell at a high price, then turn around and sell it on the resistance, and then buy it on support. And some of you did very good progress. Now we have new conditions on the market. Now we have a trend. So this is something that it could continue on. Like the range trading was happening for 3 months. So this new dollar trend, it can happen until maybe even until a solution is found for the euro. Who knows? Or until the market finds a safer place to put their money. But it's not right now. Not right now happening. There's no safer place than the U.S. dollar. So pretty much everything that trades against the U.S. dollar is going down. Here's again, crude oil. It's just a nice way. For those of you who are not familiar with crude oil trading, the crude oil is traded on future contracts. So always, instead of crude oil in the platform, you're going to see it as the contract name. This contract is CLM number 2, and the contract, it means that we're trading basically on the price of crude oil, not on the price of crude oil today, but on the price that will be on May 21st. So on May 21st, we need to make sure that we close any positions before May 21st, and then we'll have a new contract that we can trade on. But again, this is for short-term trading. We can take advantage of it very well. Really apologize about the sound quality, especially. Thank you very much for everybody who did show up today. It's really appreciated, and I do apologize about the sound. It's really necessary to get feedback and questions. That's how we can improve our service. So definitely, send me an email. Let me know what you thought about the webinar. If you have some questions, that's really even more appreciated. Because that way I know how and what to teach, and how well people are catching on. Obviously, besides the results that we can see very apparent in your accounts. Again, thank you very much for coming, and you have a wonderful afternoon, a good morning, and good evening, depending on where you are in the world. and I hope to see you soon. And I hope to see you profiting. All the best. Bye-bye.